Alright, hello and welcome to Camel Finance. I'm your boy Camel and it is Monday, although I expect today is going to be quite quiet. I'm actually going to the beach with some family and the dogs after I post this video. So today is going to be kind of a day off. There's not really much to do. Everything, in my opinion, comes down to the CPI print tomorrow. So we've kind of already set the scene for that over the past few videos. I've got a bit of news to show you, a couple of things that I saw today and I just thought those were really cool. So I'm going to show you those as well. And then I noticed a chart, this XLC chart on the video with all the technical analysis and the positioning ahead of CPI that I posted on Saturday. For some reason, the video around XLC, you can hear me talking and explaining what I did, but the whole video froze. So I just want to quickly clear this up. What happened is you'll see the chart was set like this, and I had a long position from a breakout that looked something like this. And you can hear me say that although in other charts I decided not to respect the trend line and push and hold my trades through CPI because I'm expecting a lower CPI print and therefore a risk-on rally to occur off the back of that. I was saying during the video, but it was frozen so you couldn't see. I was saying because we had this technical breakdown, I wanted to de-risk my total equity exposure. So on a breakdown of this trend line, which we had, I took this position off. I said I wouldn't be surprised to see it do something like this and recover this trend line on a low CPI print. But it's also said I wasn't comfortable holding this much equity exposure because I've already got so much other equity exposure going into the CPI print. So I've taken a small profit on this. I've drawn a line here and I'm ready to go long again if this breaks out. But for now, I currently have no XLC position. So for some reason, the video froze as I was explaining this in the prior video with the technical analysis posted on Saturday. So I hope that clears that up. No position for me at the moment, but breakout of this on a lower CPI print and we could be entering back into a long position again. So that's a trade idea called out ahead of time. Of course, we really need to see the CPI print tomorrow before I can know what's going on. For all other charts, TA, live positions and all of that stuff, go back and see Saturday's video if you haven't seen it. And remember, as far as I'm aware, let me know if you know another trader that does this, but I have shown you every single one of my positions ahead of time going into CPI. So whilst there will be undoubtedly a bunch of traders that tell you they did well, they were positioned right, they got long after a low print or they got short after a high print, whatever happens, I'm the only guy, as far as I know, showing you what my positions are ahead of time because I am actually a real trader. I don't care if this goes well or against me because I have the skill set to make sure I end the year in profit. So I'm showing you in real time, ahead of time, all of my positions going into CPI, and we'll see how the market treats me tomorrow. Hopping into some Bitcoin news, okay? Nigeria are reportedly destroying banks and ATMs after the central bank limits access to cash and forces CBDC adoption. CBDCs are slavery and Nigerians know it. They are not going to stand for this. They continue not to stand for this. Bitcoin adoption is over 40% of the adult population now in Nigeria, whilst the CBDC population remains at less than 1% adoption. Nigeria is really leading the way and showing the world that it can resist the tyranny that is CBDCs and exit the system using Bitcoin. Speaking of exiting the system using Bitcoin, El Salvador's Bitcoin risks have not materialized according to the IMF. And that's because they weren't really risks, it was just FUD. The IMF did not want El Salvador to adopt the Bitcoin standard because they knew over time El Salvador would be able to work their way to being debt-free, self-sovereign, and not have to bow to the pressures that the IMF put on them by loaning money that otherwise they would not be able to pay back. There were no risks, only FUD, and now El Salvador has set the standard and has shown the rest of the world that by adopting the Bitcoin standard, they can resist the enslavement and the entrapment of these loans that they can never pay back otherwise from the likes of the cartel organizations such as the IMF. You will see this become a theme, and I'm convinced of that. And in fact, Mexican senator has said that Bitcoin is legal tender and the future will be decentralized. Mexico are pushing towards making this legal tender. It is not yet legal tender. This is slightly misleading, but it will be soon, in my opinion. And that seems to be what the Mexican senators are saying as well. We continue to see this adoption and momentum snowball for Bitcoin. Over in Brazil, their oldest bank is going to allow tax bills to be paid off with in crypto. So they're going to accept Bitcoin and crypto to pay their taxes for when people want to pay their taxes. Again, massive, massive steps towards the adoption curve, skyrocketing. Over in Russia, the government is giving tax incentive for Bitcoin miners in Siberia. The Russian central bank have also said that they are ready to allow international trade on Bitcoin and crypto. Things are really, really getting interesting. As you can see, we're starting to see this game theory really accelerate. Russia is racing to get hash, and so is Texas. We're seeing this direct competition between China, Russia, and America as they all scramble to get a big chunk of the hash rate and secure the remaining million odd Bitcoin that are left to be mined. Over in Bahrain, they now accept cryptocurrency and Bitcoin payments in their luxury resorts. Again, we continue to see this adoption, and I'm sure we will continue to see continued adoption. This is possibly the most important Bitcoin story in just 4 tweets, and it kind of ties into what I was just talking about with Russia racing for hash. If Russia decides to use a neutral currency like Bitcoin for its energy sales, which we know they have been talking about, and if that decision was leaked to a few of the privileged Russians in advance, then what would the Bitcoin chart look like when priced in the ruble? Said another way, if they had let their billionaire friends know that this was about to be a thing, what do you think the price of Bitcoin would look like in rubles? Could it go up 70% in just a few weeks, like this, like we have just seen? I think so. The Russian ruble at the same time has crashed 65% over the last 10 weeks when priced in Bitcoin. Maybe Putin sold 3.5 tons of gold, which we know he did just recently, remember, so Russia could buy Bitcoin. Speculation, but it's possible. Meanwhile, the Russian state-backed company is building a Bitcoin mining facility with 30,000 miners. We also know about this, right? As I was saying, they are racing to compete with America and China for hash rate. And so remember that banning Bitcoin from US or forcing US hashers to censor valid Russian transaction requests will not prevent Russia from using Bitcoin, but neither could they get away with censoring Russian transactions. It only motivates Russia to accelerate the growth of their own Bitcoin hash forces. This is the beginning of the hash wars, in my opinion, and this is exactly what I've been talking about on this channel for a few weeks now. We are starting to see America, China, and Russia all start to compete for hash. We're seeing mining in Texas explode. We're seeing some of the states start to protect the right for people to run a node and mine Bitcoin. This thing is just about to explode, as far as I can tell. And I wanted to show you this from Adam Back. Now, if you don't know who Adam Back is likely one of the creators of Bitcoin. He's likely one of the 4 Satoshis. So I don't want to go too deep down this rabbit hole, but he, for me, is prime suspect number 1. And I say this because, first of all, he invented proof of work mining, which is used in Bitcoin's protocol. Of the other 3 possible candidates for Satoshi, none of them are actually English. He's the only one that's English. And the Genesis block has a hard-coded English newspaper headline from the Times that reads, "Chancellor on the brink of second bailout for banks." In addition to this guy also invented GPU mining and kept it a secret. He kept it a secret for the first few years of Bitcoin running, and the likelihood is he did this so that he could secure the network whilst it was still in its infancy. If he had released GPU mining, the network could have been quite vulnerable to attack. So the theory is that he likely kept GPU mining to himself so that he could protect the network in the early days, whilst everyone else was using CPUs from their old laptops to secure the network. My point here is that when this guy speaks, I listen. And as you can see from this tweet here, things start to get really interesting. Earlier this year, I was curious of the claim that Bitcoin's 2x per year on average. It checks the decade, January 2013 through to December 2022. Bitcoin went up an average of 2.036 times per year, which is 1,200 times in a decade. If that continues, we'll cross $10 million per Bitcoin and 200 trillion market cap by the end of the next 2 halvenings in about 9 years' time. Scrolling through this thread, you can see 200 trillion is actually Hal Finney. This is another prime suspect for Satoshi in 2009. It's his market cap prediction number. It's a lot. For this to be achievable, it would have to displace a significant part of the store of value premiums in bonds, real estate, monetary premium, gold, a 60-40 stock portfolio, etc. Some think adoption will slow and derivatives reduce volatility, but this is not the case, as he goes on to say. Adoption could have hyper-Bitcoinization spurts where rapid viral adoption nukes a weak currency in a hyperinflationary frenzy and a domino crash of 20 bottom-tier currencies. People get pragmatic, adapt fast if they see the fiat melting, and a rush of others protecting savings via Bitcoin. Also bear in mind, Bitcoin does not have to absorb anywhere near 100 trillion to reach that market cap due to the relatively thin trade-in and hodl cold store investors. If Bitcoin really gets moving, it will become harder and harder to get anyone to sell. When it becomes really obvious that Bitcoin's price is just going to continue to go up, people are not going to want to sell. You're going to have to pry it out of their cold wallets. Given volatility, he thinks Bitcoin can overshoot wildly and tap one of these 100 to 300 trillion dollar market caps, correct again, and then regain a steadier adoption over time. He says he suspects people with average entry points relative to the current price won't have much incentive to sell in size. It's true that there is some in effect Bitcoin rehypothecation via side contracts like perpetual futures. However, reality is there's really not much naked short interest, and most of the shorts are delta neutral, collecting funding rate on USD and by matching physical Bitcoin collateral. The market in Bitcoin native financialization is immature, almost untouched. Bitcoin structured products such as mortgages backed by real estate but interest guaranteed by Bitcoin, other products will make Bitcoin easier to use for more people and match risk profiles, which creates more growth. So he thinks that things are going to get very interesting over the next two halvings and very quickly. We don't have much time to scale the tech. We need somewhere for the next billion users to own their own UTXO, their own keys, with censorship-resistant cold storage without weakening the main chain security. And he says that probably means side chains, drive chains, and trade-off, more lightning optimization, other layer 2s like Liquid. We don't have much time as tech takes time to mature, wallets, interop, integration, so on and so forth. So this year is going to get incredibly interesting, particularly if we can start to see things like these products, which are mortgages backed by real estate, but interest guaranteed by Bitcoin. Bitcoin needs to first confirm that it is going to continue to go up based on its scarcity and the factors listed above. But if you can just look around and see the sort of adoption that I show you here every single day, with countries making this legal tender, banks getting involved, Russian governments and other governments all around the world starting to compete for hash rate, then all of this doesn't sound too crazy, right? And finally, he points at this. If you're a bit bearish at the moment, remember the historic rate of return is an average of 2.036 times per year. So that means we would be at 33.8k end of this year, 68.8k end of next year, 140k by 2025, over 500,000 by 2027, over 2 million by 2029, and by 2031 we would be at $10 million Bitcoin. He also says taking until December for 34k this year seems pessimistic, as the start is very, very underpriced. And I agree with this. I've been saying over and over again, I'm just going to hop straight into a chart here because it'll be easier to show you, that wherever this cycle low forms, we know this cycle low is going to form plus or minus 6 days from this arrow here at the end of the month. Wherever that forms, we then know most likely we're going to form another one of these right translated cycles in an uptrend, something like this. And we're going to be up at 30k before we drop into that next cycle low, which is due around the end of April. So we could well see 30k within the next 30 to 60 days. So indeed, we are incredibly underpriced relative to the big picture here for Bitcoin. These are incredibly exciting times indeed. So in terms of the charts, remember, look, we got CPI tomorrow, 8:30 Eastern time, which is 1:30 UK time. My expectation is that we will see a lower CPI print. I would like to see it on a 5 handle. Whether we can get down there or not remains to be seen. There's also been some jiggery pokery, if you want to call it that, pertaining to how they calculate. They have obviously changed the calculation again, and I mean, it's always been a fake number, right? But they seem to continuously make it even faker and faker and faker. Are they doing this because they know they're running out of time and they're going to have to start changing the rates? Are they doing this because they want to manipulate the move and make everything crash tomorrow? Maybe, who knows, right? We'll find out tomorrow. But for now, I remain long and strong. I continue to push and I continue to expect a lower CPI print. Of course, if we do not get a lower CPI print, then I will have to do a lot of modification to my overall positioning and reassess the situation. If you're wondering why I'm so confident about a lower CPI print, it all comes down to this chart here. The Shanghai Containerized Freight Composite Index, which is in white, as you can see, has fallen off a cliff. And the blue line behind it is the US CPI year-over-year change. I expect this to start to fall off a cliff as well, and I expect this to catalyze the melt up, as I've been saying over and over again. Of course, we'll find out if I'm right or wrong tomorrow. And it's worth pointing out that because it's a market, I could be right about CPI and still get wrecked, and I could be wrong about CPI and still make money. So really anything can happen. As I said over and over again, long and strong continue to push. If you want to see all of the trades and the TA and all of my positioning, then go back and see the video from Saturday. All of that still holds. No changes until tomorrow, and make sure you come back tomorrow and Wednesday to see if I was right. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, and turn the notifications on if you want to continue to get updates on all my positions in real time as a pro swing trader. It's Monday. Like I said at the start of this video, I'm off out now. I'm going to take the day off and I'll be back at my computer tomorrow ready to deal with the CPI. So that's it from me. Enjoy your week. In the meantime, take care. All the best. Cheers. Bye.